Welcome to this week's deep dive. We're here to really unpack the latest buzz in global payments and fintech. It's June 16th to the 20th, 2025, and we've sifted through, well, a whirlwind of news to bring you the developments that actually matter. Our mission today: cut through that noise, give you that well-informed edge, maybe even, share a few surprises. Okay, let's unpack this week's rapid-fire financial innovation.
It has definitely been a packed week. And what's fascinating here is the sheer breadth of activity, isn't it? We're seeing everything from like brand new payment methods to these major shifts in how financial data is being handled, how it's regulated. There's just this clear acceleration in digital transformation. You see it everywhere. Plus this global push for smoother cross-border payments and, of course, the ever-evolving regulatory side.
Absolutely. And, to help you navigate all this, we've structured things around the big stories. We'll look at innovations in tech, the payments and open banking scene, those crucial regulation and policy shifts, and yeah, the corporate side too, partnerships, M&A, funding. Plus, we'll touch on fraud and other key industry trends. Now, before we really dive in, just a quick word. This deep dive is brought to you by Paycademy. They're leaders in payments and fintech training. Staying ahead is crucial in this space, and Paycademy offers over 230 specialized courses. They've even got new deep dives into Red E and Red Z. Definitely worth checking out at paycademy.com.
All right, kicking us off with innovations in technology, there were some really imaginative payment experiences this week. The one that really jumped out at me, Alipay teaming up with Rokid. We're talking in-store payments using AR glasses over in China.
Right, the AR glasses. Pretty futuristic stuff.
It really is. I mean, imagine just looking at a QR code, maybe using voice verification, and bam, payment done in seconds. That's way faster than fiddling with your phone for, what, 20, 30 seconds?
Yeah.
Yeah, that speed difference is significant. And Rokid CEO even hinted at, like, a future where you just look at something or gesture and pay.
Exactly. This is where it gets really interesting. Payments just sort of fading into the background, becoming invisible.
That idea of invisible payments, that's definitely a key theme here. It's this industry push to embed finance so smoothly into life that you barely notice the payment part. We also saw Klarna, the BNPL player, making a move into the U.S. mobile market, offering an unlimited 5G plan.
A mobile plan from Klarna.
Yeah. The focus is on super simple activation via their app. No calls, no paperwork. And they're even using AI to help optimize plans for users. It kind of mirrors what we've seen from neobanks like N26, Revolut, suggests this broader convergence happening, finance and utilities blending together.
Interesting angle. And for in-person stuff, Molly rolled out their new tap terminal starting in the Netherlands.
Ah, yes, the tap terminal. Compact little thing, right?
Yeah, runs on Android. And the neat part is it lets businesses pull their online and in-person sales data into one dashboard. So it's not just taking payments, it's about simplifying the whole back-end view for the business.
Precisely. All these innovations, they really underscore this relentless drive to embed payments and financial tools right into the user experience. Whether it's new hardware, smart software, using existing channels, it's all about cutting out the friction.
Okay, so let's shift gears. Let's talk about the wider payments and open banking landscape. And honestly, you can't discuss this week without diving deep into Brazil's Pix Automático. This feels like more than just a future launch.
Oh, absolutely. It's potentially a game changer, especially for financial access down there. It's basically a new way to handle recurring payments. You authorize it once, and then automatic deductions happen straight from your bank account. No credit card needed.
No credit card. That's the key, isn't it?
That's the transformative part. Think about it. Brazil has something like 60 million people without credit cards. Suddenly, this whole world of recurring services, subscriptions, it opens up to them. It's not just adding users. It could fundamentally reshape how credit and subscriptions work in Brazil, maybe even leapfrog some of the traditional credit infrastructure.
Wow. And the potential scale.
Well, Ibanez put out some projections. They think it could unlock over $30 billion in Brazilian digital commerce just within 2 years, and potentially account for like 12% of all Pix transaction volume. That's huge. Plus, you have players like Nubank adding features like search upcoming bills, giving users more control over this automation. Feels well thought out.
And it's not just Brazil pushing the instant payment envelope, right?
Yeah.
Australia's seeing movement too.
Correct. Motorhome Republic, they're part of Webjet, partnered with Volt for Payto at checkout. Payto is another one of these real-time account-to-account systems, A2A. It bypasses the card networks, so you get that one-click checkout experience, and crucially lower acceptance costs for the merchants. Speed and efficiency, bank to bank.
So if we connect this to the bigger picture,
You're seeing a clear acceleration towards instant, interoperable global payment rails. It's undeniable. It's driven partly by consumers wanting things now and partly by regulators pushing for more efficiency. And this week really hammered that home with advancements in cross-border payments.
Right, like DTC Pay and MasterCard Move.
Exactly. They're simplifying global money transfers, opening up, what was it, 49 corridors from Singapore,
Yeah.
and promising much faster processing, like 60% more transactions per hour. That's a big claim. We also saw moves focused on remittances, Jingle Pay with Western Union, Zoom Rails with Western Union Canada, using Interac e-transfer for real-time movement out of Canada.
And it goes beyond just sending money home, right? Businesses need better tools, too.
Absolutely. Solidgate launched Treasury. It gives digital businesses multi-currency IBANs, seems focused on helping them expand into the EU, making onboarding smoother. Avery launched Avery Connect, that's embedded infrastructure for B2B, even B2B2C cross-border payments, automating complex flows. And then there's Tensec. They just raised $12 million and have this bold goal, become the Stripe for global trade.
Stripe for global trade. Wow.
Yeah, using AI, real-time payments to offer FX, cross-border stuff, treasury services, targeted at the SMB clients of global trading companies. So the whole global money movement space is getting more specialized, but also, paradoxically, more connected. And as we delve into these complex topics, understanding the regulatory landscape is key. That's why we're grateful for the continued support of Pay Academy. Their in-depth courses, like Mastering Regulation E and Navigating Regulation Z, are designed to empower financial professionals to stay compliant in this ever-evolving payments ecosystem. Check them out at payacademy.com.
Okay, perfect timing. Let's pivot now to regulation and policy shifts. This is always a critical piece of the puzzle. The UK launched something called the Smart Data Group. The idea seems to be extending open banking's benefits beyond just finance.
Right, into areas like energy, telecoms, retail, enabling secure data sharing so consumers can get more tailored services, theoretically giving them more control.
But then in the EU, their FIDA proposals, financial data access, are getting some pushback.
Yeah, from the fintech industry. Concerns about excluding large corporates and credit rating agencies from the scope. And also a preference for letting the market develop API standards rather than having them centrally imposed. It's that classic tension, innovation speed versus regulatory control.
That push and pull seems constant, doesn't it? We also saw open banking delays in Canada, still relying on screen scraping.
Yep, legislative delays mean screen scraping persists, which always raises those privacy flags. No clear framework yet. And back in the U.S., Illinois hit pause on that interchange fee law, the one about fees on tax and tips, delayed until July 2026.
Why the delay there?
Mostly banking industry opposition and legal challenges. Shows the lobbying power involved. Meanwhile, Kuwait's central bank is tightening the screws on e-payment providers, emphasizing compliance, data accuracy, AML/CTF rules.
And speaking of rules, National Australia Bank, NE, got hit with a penalty.
Yeah, about $750,000 for alleged breaches of the consumer data right rules, specifically not disclosing credit limit data accurately. It really highlights that data quality, not just having the data, is crucial for these systems to actually benefit consumers.
Okay, so sticking with regulation, stablecoins. This was a massive week for stablecoins, wasn't it?
Monumental is probably the right word. In the U.S., the Senate actually passed the Genius Act, bipartisan support too. It sets up a federal regulatory framework for stablecoins. The stated goals are consumer protection and ensuring the dollar remains dominant. A really clear signal.
And the EU is moving fast too with MiCA.
All right. MiCA markets in crypto assets regulation came into force in June. Gemini and Coinbase were apparently close to getting their licenses under it. But MiCA is proving pretty strict. Its reserve requirements, especially demanding reserves be held in European institutions, even led Tether to say they'll likely pull back from the EU market.
Wow. So the regulations are already having a real impact.
Definitely. And what's really fascinating now is seeing the corporate, even national interest picking up because there's more regulatory clarity, or at least the path is clearer. You've got JP Morgan piloting a deposit token, JPMD, on Coinbase's base blockchain. They see it as an alternative to stablecoins for 247 commercial settlement.
A deposit token, not quite a stablecoin, but serving a similar function.
Exactly. And look at China's JD.com. They plan to apply for stablecoin licenses, starting in Hong Kong. Their goal: slash cross-border payment times and cost by up to 90%. That's incredibly ambitious, and it ties right into China's broader push for the digital CNY internationally, wanting a more multipolar currency system. They just set up a new eCNY center in Shanghai, too.
It's not just the giants either, is it? Smaller players and retailers are looking into this.
For sure. Revolut is reportedly exploring its own stablecoin. We heard whispers about Walmart and Amazon examining their own stablecoins too, potentially to bypass card networks. That's a huge potential disruption if it happens. And Visa. They're practically shouting from the rooftops. They literally said every institution that moves money will need a stablecoin strategy.
That's a bold statement.
It is. They pointed $27 trillion in stablecoin volume last year. They're pushing hard for lower settlement costs, 365-day settlement, and highlighting partnerships with firms like BVNK and Yellow Card to make it happen. So yeah, this isn't just about crypto enthusiasts anymore. It's about potentially replumbing the global financial system.
It really feels like we're at an inflection point, that tension between the tech speeding ahead and the regulators trying to build the guardrails. Oh, and before we leave regulation, El Salvador popped up again, buying more Bitcoin.
Yep, added another 240 Bitcoin to their stash. This is despite their IMF agreement terms suggesting they should stop. They're sticking to their daily purchase plan. Although, interestingly, the data shows crypto remittances to El Salvador have actually been declining lately, so the picture there is complex.
Always complex. Okay, let's shift gears again. Time to talk partnerships and corporate developments, the business side of fintech.
Always a busy area.
Definitely. We saw First International Bank and Trust linking up with Raisin via Codepay's Cavinu platform. That sounds like a banking-as-a-service play, making it easier for Raisin to operate.
Right, Bank Direct Boss. Designed to cut complexity, speed things up.
And for consumers, Paragon Bank launched Spring, a savings app using MoneyHub's open banking tech. Helped people in the UK optimize their savings. Nice to see direct consumer benefits.
Yeah, and we keep seeing brands embedding finance. A firm renewed its deal with DIC Sporting Goods for flexible payments. In B2B, AdFlex partnered with Coupa, using straight-through processing for commercial cards. That means less manual entry, less PCI scope, so better security for businesses handling card data.
Makes sense. And on the MA front, seemed like quite a bit happening there too.
It was active. Italy's Fabric bought 75% of Germany's FinIPI, expanding their open finance reach into Germany and Austria. And a really interesting one, Lemfi acquired Pillar. The goal is to offer credit services to immigrants in the UK, specifically targeting the credit invisible, using Pillar's alternative scoring tech.
That's more than just consolidation. That's M&A for financial inclusion.
I like that. Me too. It highlights how M&A can target specific market needs. Elsewhere, consolidation continues. Pollen Street Capital is reportedly looking at Metro Bank in the UK. And internationally, France's BPCE is buying 75% of Portugal's Novo Banco. Big deal. Nearly $7.4 billion. Part of that broader European banking consolidation trend. You're seeing mature, often profitable, mid-tier fintechs becoming prime acquisition targets now.
Right. And the money kept flowing too. Let's talk funding rounds.
Always. As per used to be, Vance raised a big $50 million Series B. They focus on remittances and banking for non-resident Indians in places like the U.S., Canada, Australia.
And Ramp. They seem unstoppable.
Another huge round for Ramp. $200 million Series E, valuation now $16 billion. They just keep building out that financial operations platform, adding more AI for cards, expenses, treasuries. Investors clearly still love platforms automating corporate finance, especially with that AI layer.
Any other notable rounds?
Yeah, Salmon got $88 million to expand in Southeast Asia, focusing on the Philippines with credit and lifestyle banking again, targeting underserved markets. Ubix raised $10 million seed funding for a pretty novel idea. A stablecoin redemption network for regulated banks and fintechs, aiming for 247 face value redemption across blockchains. Kind of bridges the gap between stablecoins and traditional banking.
Bridging the gap. Interesting concept.
And Payably closed $28 million Series B to boost its embedded payments and AI tools, working with NVIDIA on fraud detection. Polar raised $10 million for its merchant of record billing engine, targeting AI businesses needing global payments with minimal code. Instapay got $3 million to help underbanked migrant workers in Malaysia. Lots of activity across different niches.
Okay, last big section, fraud and industry insights. Always important, sometimes worrying.
Especially this week. That sub report on APAC fraud was pretty stark. AI-enabled fraud is spiking. Health tech saw a, 723% year-over-year increase. FinTech up 116%.
723%. That's staggering.
It is. And deepfake fraud specifically up 1,500% in Singapore, 9,900% in Hong Kong. Synthetic ID document fraud also way up. The threat landscape is evolving fast.
So what are regulators doing?
Well, U.S. federal banking regulators are asking for public input on how to reduce payment fraud, especially check fraud. They're emphasizing collaboration and using tech tools, including AI. Which brings us back to that question, doesn't it? This raises an important question. How do we balance the immense potential of new technologies with the critical need for security and transparent practices?
It's the core challenge. We also saw a report about the Bank of England losing laptops and
Yeah,
phones.
over 300 devices lost or stolen in 3 years. Raised some eyebrows, though they say the devices were encrypted. Still, not a great look.
Not ideal. And what about consumer behavior? Any insights there?
DECTAT had a couple of interesting studies. One found massive wallet fatigue. Like 91% of digital banking customers said they'd happily use just one app if it did everything they needed. It suggests this forced fragmentation because current apps often miss key features like budgeting or specific security tools people want. Consumers want consolidation.
Makes sense. One app to rule them all.
Sort of. Another DECData white paper looked at SME payment needs. Consumers expect more from small businesses now advanced tech, like BNPL, open banking payments, and interestingly, they prioritize security over pure speed. Refunds are also a pain point.
Okay, so a quick recap of this packed week. We've seen digital payments pushing boundaries, AR glasses, simplified mobile plans from fintechs. We've navigated that complex dance between innovation and regulation, especially around stablecoins getting serious frameworks and attracting huge corporate interest. And we've seen the increasing sophistication needed both for cross-border finance and, crucially, for fighting off advanced threats like AI-driven fraud. It really makes you wonder how fast everything will converge. Will we really just have one main financial app or interface soon?
It seems possible. But the ongoing challenge, the big question really, is how to make all this advanced finance truly accessible and secure for everyone, everywhere, not just the tech-savvy in major markets. So maybe the thought to leave you, the listener, with is, how will these accelerating trends actually change your financial habits and expectations in the next year or two? Will your phone truly become your bank branch, your advisor, everything? Or could something like AR fundamentally change how you interact with money in the physical world?
Lots to think about there. Really fascinating stuff. And if you want to keep digging into these vital insights with us, please don't miss our upcoming deep dives. Make sure you subscribe to the BayPay Forum YouTube channel. That's youtube.com/BayPay Forum. We've got more in-depth discussions and analysis coming your way. Thank you so much for joining us on this deep dive today. We'll catch you next time for more essential insights from the world of payments and fintech.